When you look at project finance for new technology, it's great that it exists, but it's not always optimally designed. So if you look at auto fleets, or you look at aircraft, you look at anything else, typically they can raise 90% plus of the capital from debt.
Wow.
Right? They're like pretty stable assets. The life and performance of these assets are pretty well known. It's all sorts of things that are raised in project finance.
Yeah.
When you look at renewables, it's closer to 70%, than not 90%. And the reason for that is that it's a newer technology and there's volatility, and a bank, like the worst thing that can happen in a bank is a default. Like it's pretty common for an insurance company to pay a claim, but you know, if you have a default, the bank like sirens go off. There's specialty workout groups that come in. You know, you don't really want that in a bank. So the bankers, appropriately, maybe you could say, designed their loans to be pretty conservative, and that was kind of the insight that we had. Is hey, if we know production the best, and most of these projects have a long-term offtake. So the source of volatility is really coming from production. They have a long-term purchaser of the electrons. If we could put a floor on that production, you can functionally put a floor on the revenue and de-risk the investment for the lenders. And you know, even if they knew this info, they probably would still be structuring it pretty conservatively, just because they're like, well, we can only take a 1 in 100 or 5 in 100 chance that this is a default. So we're able to move that risk into the insurance markets, which I would say is just a better form of capital for this kind of risk, right? They can take some of that tail risk in a way that a bank really can't. And the lenders are able to give preferential terms to our clients when this product's in place. So we call it the solar revenue put, but it's a long-term floor on production, structured as insurance. You could think of it as we sell it to our clients as a credit enhancement, but basically we're taking a component of the risk, we're transferring out of the project finance structure into a different capital stack that unlocks value. And you know, they get terms that are better for them and ultimately help enable projects being built. Hi, I'm Jason Kaminsky, the CEO of kWh Analytics, and this is the future of insurance.